Hi folks, this is Sean Hyman from Chart of the Day, and I just want to talk to you about the power of moving averages and also tight consolidations, how they can tip you off to huge breakouts to come. And you'll notice the black line is the 50 SMA simple moving average on the daily chart here of euro pound, and the green line is the 200-day SMA simple moving average on euro pound. And the green line gives you the average price over a long period of time. It's your long-term moving average. Your 50 SMA is your medium-term moving average. And I just want to show you how these act as ongoing support and resistances as well. For instance, as this comes down, bumps up, it's resistance, resistance, hits it again, resistance, hits it again, resistance, resistance again. Finally breaks through it, uses it as support. Where does it go to the next level? Up here we get resistance, pulls back, breaks through, comes up here, comes down into the region of this moving average and just kind of trades sideways, then gets caught in between the two moving averages, between the 50 and the 200, the 50, the 200, the 50, the 200. And I don't mean exactly like in the regions of the 200 back up to the 50 is where we sit as of this recording. And now also onto the consolidation part, notice how this is getting tighter and tighter. It's forming somewhat of a descending triangle. And so this pattern will likely, let me see if I can get it here. Get my line up. There we go. This pattern will likely, continue to come down like this, something like this, tight consolidation, and then either break upward directionally quite a bit or break downward directionally quite a bit. If there's one thing that's for sure in the markets, low volatility begets high volatility. For instance, here's a low volatility section begets high volatility. Here's a low volatility section begets high volatility in directional move. So a low here's a consolidation to where the pair just tightens up in a triangle, tighter, 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 boom, huge move. This one tightens up kind of like this, tight, boom, like that. This one is a little bit more of a sideways range of sorts, consolidates here, and then takes off with its huge move. And what do we have here again? This is consolidating after the huge move. It starts long move, slightly smaller move, slightly smaller move, slightly smaller move, slightly smaller move, etc. And it will continue to wind and coil, and this coiling will eventually spring out directionally either upward or downward in quite a huge directional move. So be ready for that when that happens. You usually want to see a good solid close outside of the pattern first before entering, because you can definitely get some long wicks out and then the pair suck back in and fake a lot of people out. So one way to resolve a lot of those fake outs, because you can never resolve 100% of chances of them, but the way to resolve the bulk of those is to allow a close outside to the top of this pattern or to the bottom of this pattern, and then hop in short down here and ride it down here, or hop in long up here once you see it close and head up here. Now the reason why I would not say just put a limit up here or an entry up here and an entry down here is because you could get one of those spikes that spikes and hits your entry, and the daily candle doesn't close there, and it sucks right up back in the pattern, and you would be in a bind because it may or may not break back out in your direction. Matter of fact, more times than not, when they spike one direction and go back into the pattern, they end up breaking out the other direction. So if you had a spike and come back into the pattern, then you would likely break out this way. If you're spike and then come back into the pattern this way on an intraday basis to where the close was back in here but a wick was back up here, then your breakout would likely be to the downside. So you definitely don't want to be fooled. You definitely want to be patient. You definitely don't want to get caught on these. The good thing about these tighter consolidation patterns are, since the directional move is usually fairly long. Let's say you did come out here, and let's say it is one of these false break times even that closes out here, which are rare but sometimes happens, and you get short. If you see that it comes back into here and starts pushing through the other side, you can flip your position. Yes, you lost from here to here, but since this is going to be such a huge directional move in the way that it ends up going, you can more than make up that by once you get here, and then all the remainder of this is profit on the trade. So again, just a little tip there that I think will help you a good bit in your trading. Watch these tight consolidation areas, because know that a breakout is coming from them, and when the breakout comes, it'll be quite significant. So and watch your major moving averages and see how the price is responding there as well, because they can act as huge ongoing support and resistance levels in and of themselves. Thanks so much for watching today. Bye-bye.